Hi everybody. In the previous two study guide videos for Chapter 17, we completed the pension worksheet for Kearney, Inc. In this video, we'll prepare 20X1 journal entries relating to the pension plan. This is a continuation of the exercise we completed in the previous two videos. You will need the pension worksheet we completed in those videos in order to write the necessary journal entries. Here is the completed worksheet. Please pause the video to check your worksheet and correct any errors you might have made before you continue with this video. First, let's write the journal entry to record pension expense for the year ended December 31st, X1. We're going to use the numbers in this column to record the pension expense. There's an excellent example in your textbook that you can use as a guide in writing the pension expense journal entry. The example is shown on the page just before illustration 17-14 under the heading Recording the Pension Expense. That example shows the components of the pension expense and how they are used to write the pension journal entry. These are the components of our pension expense. That journal entry will help you to use as an example in writing our journal entry using our components of pension expense. Please pause this video and write the pension expense journal entry for Kearney. Take the numbers from our completed pension worksheet and use the textbook example as your guide. When you have finished writing the journal entry, start the video again to check your work. The journal entry should be a debit to pension expense $95 million and a debit to plan assets $68 million. Those numbers come from our worksheet. Here's the total pension expense for 20X1, and here's the debit to the plan assets of $68 million. Now we need to credit the PBO for the two numbers in our pension expense that come from the PBO, and that's $74 million service cost plus $83 million interest cost. So that's a credit to the PBO of $157 million. Then we need to debit amortization of prior service costs, OCI, credit for $5 million, and credit amortization of net loss, OCI, of $1 million. That is the $5 million reduction of the prior service costs and the $1 million reduction in the net loss, which is the amortization of each of those accounts. Now let's write the journal entry to record the 20X1 gains and/or losses. Remember that gains and losses on the plan arise from two different sources. The first is a change in an estimate or assumption about calculations used in determining the PBO, such as a change to the estimate in the final year salary used in the pension formula. The second way that a gain or loss can arise is when the actual return on plan assets differs from the expected return. In this problem, a $13 million loss was generated. It doesn't say exactly why, but I'm going to assume that this loss was generated due to a change in the estimates used in the PBO calculations, and a $7 million loss was generated because the actual return on plan assets was $7 million less than the expected return. We could write two journal entries to record these changes in the net loss, or we could combine the two changes into one, and that's the way I'm going to do it. As you can see, there's a total $7 million plus $13 million increase to the net loss AOCI. Those are debits. Go ahead and write the journal entry to record the increase in net loss, and then start the video again to check your work. We need to debit a loss -OCI, other comprehensive income, credit the PBO, and that's for $20 million, credit the PBO for $13 million, and credit plan assets for $7 million. 7 plus 13 is a $20 million debit to net loss, and a credit to plan assets of $7 million, and a credit to the PBO of $13 million. Notice that I did not directly debit net loss -AOCI. Instead, I debited an other comprehensive income account called loss -other comprehensive income for $20 million. Debiting loss -AOCI would be similar to debiting retained earnings instead of rent expense when you pay your monthly rent. The statement of other comprehensive income, OCI, shows the current year's OCI's gains and losses. Those accounts are not closed to retained earnings at the end of the year. Instead, they are closed to an account in the equity section similar to retained earnings called accumulated other comprehensive income. Now let's write the journal entry to record the new prior service costs in 20X1. The problem states that the pension formula was amended at the end of 20X1, creating an additional service cost of additional prior service cost of $40 million. And we recorded that as a credit to the PBO and a debit to prior service cost -AOCI. Big hint, you're going to go to prior service cost, but not AOCI, but OCI. So record that journal entry, then start the video again to check your work. Debit prior service cost, OCI, $40 million. Credit PBO, $40 million. Now please pause your video to write two journal entries. Number 5, here, write the 20X1 journal entry to record the cash contributed to plan assets. And for number 6, write the 20X1 journal entry to record the payment of retiree benefits from the plan assets. The journal entry to record the 20X1 cash contributed to plan assets was a debit to plan assets, $84 million, and a credit to cash, $84 million. That's this $84 million increase to the plan assets and $84 million decrease to the company's cash account. And the 20X1 journal entry to record the payment of retiree benefits is a debit to PBO to decrease the PBO and a credit to plan assets to decrease the plan assets for the $50 million that was actually paid out to retirees during the year. Well, that's all for this video. See you next time.